Welcome, grade 11. Today's topic is international trade. This is Mrs. Ferguson-Burrows. Nice to have you back again. Your lesson objectives are as follows. At the end of this interactive PowerPoint presentation, you should be able to define the term international trade. Discuss the importance of international trade. Distinguish between imports and exports. Discuss the importance of favorable balance of trade and balance of payments. And solve for the balance of trade and the balance of payments. These are your lesson's objectives. What exactly is international trade? Let's think about the two terms, international trade. As you would have learned in the 10th grade, trade is the exchange of goods and services for money or some form of payment. International is obviously outside of the country of a particular person that we're referring to. So exactly what is international trade? International trade is the buying and selling of goods and services between different countries. Another name for international trade is foreign trade. So international trade can also be referred to as foreign trade. Please note that I always give you alternative names because I will never know in advance what the BGCSE or the national exams will refer to these things as. So sometimes they may refer to it as international trade or they can call it foreign trade. Please note they mean the same thing. How is international trade important to the Bahamas? It's clear, let's face it, the Bahamas is not a self-sufficient country. When I use the term self-sufficient, what I am saying is the Bahamas cannot provide all that it needs to supply or to meet the needs and wants of the Bahamian population. So we rely heavily on international trade. We simply cannot produce everything we need. For example, electronics, cars, and a lot of our food are not made here, so we must buy them from other countries. Using international trade also allows us as a country to obtain a much wider variety of goods. When I say a variety of goods, let's use, for example, spaghetti, canned spaghetti. There are at least about 3 brands of spaghetti that I can think of right away. Chef Boyardee, Libby's, Campbell's. Without international trade, we may not have been privileged to have a wide variety of canned spaghetti. International trade also allows Bahamians to have a higher standard of living. Exactly, what do I mean by a higher standard of living? This is referred to as the level of wealth, comfort, material goods, and necessities available to a certain class or area. Last, the money we receive from international trade can be used to help pay for important things for our country. For example, medical supplies, salaries, infrastructure, new buildings, and so on. International trade is divided into imports and exports. Imports, which will be discussed first, is divided into visible imports and invisible imports. Let's use context clues. Visible is obviously something that can be seen with the eyes or touched with hands. Invisible imports is service. That's an intangible good. So we're going to use the word tangible and intangible. Visible imports are tangible or touchable goods, and invisible imports would be services. When goods or services are bought by our country from another country, they are called imports. Now let's think about it. If we are buying goods from the USA, that means money is leaving our country and we are receiving the good or service. So, imports results in an outflow of money. As we've discussed imports, now let's look at exports. Exports are divided into visible exports and invisible exports. When goods or services are sold by our country to another country, they are called exports. Exports result in an inflow of money, meaning when we sell something to another country, the country pays us with money, and that money is used to supply the needs and wants of our country. So it makes sense to have more exports than imports, but we'll discuss that later on. Next slide. Now that we have discussed the difference between imports and exports, we're going to do a very short activity. You're going to state whether the following are visible imports, invisible imports, visible exports, or invisible exports, or none of the above to the Bahamas. So let me get the pen. All right. A Ford motor vehicle brought into, keywords, into the Bahamas from the United States. What are we bringing in? A Ford motor vehicle. Now, the first question you're going to ask yourself, is this imports or exports? This item is being brought into the country, therefore it is imports. Now you need to determine whether it's visible or invisible. Can you see or touch a motor vehicle? Yes, you can. Therefore, it is visible. So you're going to write VI, visible import. And visible import results in an outflow of money. A British resident rents a guest room in a Bahamian hotel. A British resident rents a guest room in a Bahamian hotel. Okay, let's first determine if this is imports or exports. Whenever you're not sure, think about, is it resulting in an inflow of money or an outflow of money to the country? So if a guest from British rents a room in a Bahamian hotel, that's money staying in the country, therefore it is considered to be export. Now we need to determine if it is visible or invisible. Rent would be considered a service because you're not purchasing a room. You are using the room. You are renting the room. Therefore, that is invisible exports. An American ship owner insures his vessel at a Bahamian-owned insurance company. First, we need to determine whether it's imports or export. And like I said previously, if you don't know, you should determine whether it's resulting in an inflow of money or an outflow of money. If an American ship owner insures his vessel at a Bahamian-owned insurance company, that's obviously resulting in money coming into our country, so it's definitely export. Now, is it a good or is it a service? Is it something tangible or is it a service or is it intangible? It's intangible. Insurance is a service, not a good that you're purchasing. So therefore, it's invisible. And the last one, an American ship delivers goods for cost right wholesale. An American ship delivers goods for cost right wholesale. Let's determine whether money is going away from our country or money is coming into our country. In this case, cost right must pay for those goods that are being delivered. So that's money leaving our country. So that's import. Is it visible or is it invisible? You're not paying for the goods. This is not saying you're paying for the goods. This is saying you are paying for the goods to be shipped. Therefore, that's invisible. At the end of this lesson, you will have some more practice activities that you will be asked to submit to test your understanding of distinguishing the difference between visible imports, invisible imports, visible exports, and invisible exports. In the Bahamas, we sell items such as crude salt, crawfish, fish, fruits, vegetables, and rum to other countries. And in return, we buy many goods from other countries: cars, food, oil, machineries, etc. Now we're going to go into the calculations of international trade. There are three main calculations you need to know for examination purposes: the balance of trade, invisible balance, and the balance of payment. Let's look at the balance of trade first. The formula for balance of trade is visible export, takeaway, visible import. And please note, exports are always supposed to be listed first. It doesn't matter what formula you're using, exports are to be listed first, and you are to take away imports from exports. But let's talk more about balance of trade. In the same way that every country family has to budget to ensure it spends only what it can afford, so must every country keep its spending within the limit of its income. So the family may keep a record of its income and expenditure, and countries also record the difference in value between imports and exports. So the difference between the value of goods a country import and export is known as the balance of trade. And because goods can be seen, they are collectively called visible. That's why balance of trade deals with visible figures only. Invisible balance. In countries like the Caribbean countries buy and sell a number of services. So invisible balances is where we're going to calculate the services. So balance of trade deals with the goods. Invisible balance deals with the services. So Caribbean countries buy and sell a number of services. Because these services, unlike goods, cannot be seen, they are collectively called invisible balances. Okay? So the difference between invisible exports and Invisible import would be your invisible balance. Now, our balance of payment is made up of total imports minus total exports. Favorable balance of payment exists when there is a net flow of capital. The country has earned more than it spent. That's when your balance is favorable. And all countries should work to having a favorable balance as much as possible. An adverse balance exists when there is a net currency outflow. The country has spent more than it has earned. So that's what we should be um, trying our best to avoid. An adverse balance. We should try to get a favorable balance. That should work out in our favor. To look at exactly how to apply our formulas that we discussed earlier. Okay, so just a quick um, review. Balance of trade is calculated. This is dealing with our visible goods. Balance of trade is visible goods. So that visible exports. Oops, my pen is not writing. Take away visible imports. All right. So I did the first one for you. So our visible import for year one is 50,000, and our visible import for year one is 40,000. So that leaves us with 10,000. So I did the first one for you. Now find the invisible balance. If you remember, invisible balance deals with invisible figures. So these are your invisible figures. So, as I would have mentioned earlier, exports are supposed to be written first. So, our invisible export is 140,000 and our invisible import is 165,000. When we take that away, that's going to give us a negative 20,000. Now, this bracket is what tells us the number is negative. So you must put a negative number in bracket, or you can simply put the negative sign in front of the 20,000, but I prefer for a bracket to show that the number is negative. Balance of payment. If you recall, the formula for that is total exports take away total imports. So what we're going to do is we're going to add up both exports and add up both imports, and we're going to take away the imports from the export. Our calculation was $10,000. Okay? 2. So let's try it again. Let's remember our formula. Balance of trade deals with visible figures only. So for year 2, our visible export is 85,000, take away 95,000. That's going to give us negative 10,000. So I place the $10,000 in brackets to show that it's negative. Balance tells us that we're dealing with the invisible figures. So we pull the invisible import and the invisible export. 220,000 take away 300,000, and that gives us negative 80,000. All right. I'm going to give you a minute to calculate year 3 and year 4 balance of trade, invisible balance, and balance of payment. All right. Now we're going to talk about if, the country is anything like the Bahamas, who has a deficit balance of payment. What are some of the things our government should be doing at this time to correct our balance of payment? First off, we may have to borrow from the International Monetary Fund. Okay. Also, we may have to obtain loan from abroad, which we've been doing. We may also have to sell off our foreign assets, which is straightforward. We may also have to look at devaluation. And I'm going to elaborate a bit on devaluation. Devaluation means lowering the value of a country currency in relation to other countries' currency. This would make imported goods more expensive, and exports will then become a lot more cheaper. So we will be able to increase our exports if our country's dollar was to devalue. Also, inflation is another point I want to elaborate on for just a bit. If inflation simply means if people income is reduced, this can then lead to a reduction in imports because people will buy fewer goods, including imports. Okay? And also, to help correct our balance of payment, we can also put in place import control. And what I mean by that is tariffs and quotas. So, and those are the two main methods of restricting import by taxing us and by putting quotas or probably embargoes in place. A tariff is basically, and I'm going to elaborate on what a tariff is. It's basically a duty or a tax imposed on imports to increase their costs and discourage persons from purchasing. So when you go away or when you ship items and you have to pay duty on it, the duty is just not put in place to generate income for the country. The duty is actually put in place because they want to find a way to discourage persons from buying abroad. And a quota is a numerical limit put on the quantity of a commodity permitted to be imported into the country. So, for example, if the government was to say you cannot import no more than 1,000 whole chicken into the country, it's because they're trying to protect local farmers who wish to harvest and sell their poultry to the Bahamian population. Also, the government may consider putting a temporary embargo on certain things, or that can also be referred to as a temporary ban. That's where they say, okay, for a certain point in time, Bahamians will not be able to import. Let's use face masks, for example. So it can allow the face mask industry within the Bahamas to generate sales. Okay, and those are some of the ways we can correct our balance of payment if we were to have a deficit balance of payment, and these can turn around the country a lot. And the activity slide to complete this activity, and you are to submit this activity to me via Edmodo. In addition to this, I will be sending you a few worksheets and a few practice activity on international trade. Until next time, between this slide, which is the final slide,